Question comes up, who will buy my business? In today's video, we'll walk through 6 types of buyers. I'm Arthur Petropoulos, Managing Partner here at Hillview Partners. We're a middle market, lower middle market, investment banking, M&A, capital advisory firm, helping companies generating $1 million to $10 million a year in pre-tax earnings or EBITDA sell their businesses or secure capital. And so when someone says, who will buy my company? There's lots of reasons why someone may want to acquire a business. We've walked through those in the past, but today we'll walk through the 6 types of buyers, broad categories, and a little bit more color into each, how they tend to look at deals, and how they tend to pursue opportunities. And so we'll start on the large end of the spectrum, kind of work our way down to the small end of the spectrum. But on the largest side of things, you're going to have strategic acquirers. These are either public or privately held large operating companies that are going to buy businesses. So if you made food products, it would be Kraft Heinz. If you provided software services, it would be Oracle or Microsoft. If you provided pharmaceutical services, it would be Pfizer, AbbVie, Thermo Fisher, a bunch of things in that space. But you get the point. It's large companies that do a thing. Now, acquiring businesses is one means of growth for these companies. And so you'll hear the expression organic or inorganic growth. Organic growth being more sales for the company, growing the earnings of the business by just growing the business through different business development initiatives of getting more customers. Whereas inorganic growth is the direction of acquiring businesses. Now, why do strategics acquire businesses? Typically to get access to certain end markets or user bases or client bases that they don't have good access to or they want better access to, or capabilities. They want a new tool, a new solution. A good example of this would be, think of Athena Health in the space of services and software selling into the healthcare space. They're constantly buying solutions, tools, smaller companies to be able to have more stuff to offer to their clients. And so that's the idea of strategic acquirers. They are looking to acquire businesses to add them to their collective, particularly relative to access and capabilities. Slightly down the spectrum, and it's not so much a size distinction, but just an angle distinction in some ways, is middle market private equity firms. So these are larger firms, typically that have a portfolio company or an existing company in a space or in a particular business, whether it's, again, specialty manufacturing, niche distribution, business-to-business services of some sort, and they're buying on companies to, again, either increase access, increase capabilities, just get more of what they have. And so if this is a company that puts on roofs of houses and they do it in every state in the country except Texas, you can imagine they would seek to fill those gaps. And so private equity firms, you'd say, hey, that sounds a lot like a strategic, is because larger private equity firms who have large portfolio companies effectively are just financially backed strategic companies. And so when you're talking to larger private equity in the sense that, say, they like portfolio company deals in the $10 to $50 million EBITDA range, yet they will look at add-ons or bolt-on acquisitions in the $2 to $10 million range. That's kind of broad-based middle market, larger middle market private equity firms. Oftentimes we'll be looking at companies that we represent in the $1 to $10 million EBITDA range as tuck-ins, bolt-ons, add-ons, aggregation strategy type of acquisitions. So moving one notch further are lower middle market private equity firms. And the way we would distinguish this is which companies are more likely or which firms are more likely to buy a business as a portfolio company proper in the sense of being a platform business, right? So you are either in the private equity world being added to an existing portfolio company or bolted onto one that already exists, or you become the platform around which the acquisition strategies continue. We'll put a thumbnail here as to the strategies of private equity firms and why these aggregation strategies are undertaken. However, generally speaking, the way we distinguish middle market versus lower middle market private equity is where would our clients more likely be a platform company versus a bolt-on. And in a platform company, you have the opportunity to sell not oftentimes 100% of the business. Sometimes it's 80% of the business, 90% of the business, rolling equity forward, staying involved. There's a lot of implications of being the platform versus the bolt-on. And you have to find the right mix depending on what the objectives of ownership are. And so if ownership wants to stay around, if they want to keep leading the charge, well, maybe let's find a firm that's better suited to find them to be a platform versus if ownership would like to transition outward and their company gets morphed into a larger enterprise, that would be more akin for a bolt-on acquisition. And so that's kind of that spectrum of middle market going into lower middle market private equity. And just like strategics, there's a lot of overlap. It's a bit of a Venn diagram. And so these are somewhat overly simplified descriptions of things, but at least to give you a sense as to kind of what these buckets are. Moving down the chain, moving down the line are search funds. And so search funds have become the nomenclature, but they used to be called fundless sponsors at times or independent sponsors. But these are oftentimes investment vehicles, oftentimes by an entrepreneur, a handful of entrepreneurs that are looking to buy businesses, and oftentimes multiple businesses. But the distinction largely, again, between search funds, independent sponsors, is the funding source, in that a private equity firm will typically have committed capital in a fund structure, whereas search fund oriented things will be funded more on a deal by deal basis. And sometimes it's the search fund looking to buy one company to run on a going forward basis as kind of a platform for further aggregation or just organic growth. In other situations, it's going to be something where someone's looking to buy a lot of different things, but they're just funding things on a deal by deal basis. But that's why it's important, as you're discussing with people, is understanding kind of objectives, track record, capital sources, because each one's going to have a slightly different implication relative to what are the objectives of the acquirer, as well as the probabilities of closing and other considerations of the deal. And it's not to say, just because someone is funding something deal by deal does not mean it's a lower probability than a private equity firm with committed capital, because there are private equity firms out there that will bring a deal all the way through diligence and not do it. And just the same as there's independent sponsors who will need to go out and find the money on a deal-by-deal basis, but it's one phone call away and they get the answer right away. And so there's good and bad in both, and you can't necessarily judge a book by its cover. Those are generally the distinctions from our perspective and experience. However, every rock does need to be turned over and things need to be analyzed on a case-by-case situation. Moving to the other end of the spectrum now is really going to be the high net worth individual. And this is going to be a person at high net worth from a very general sense. It doesn't need to be Thurston Howell III, worth nine-figure sums. I mean, this can just be someone that's been an executive at a business or a manager at a business for a long time, has some money saved and wants to buy a business. And now with all of the different funding and debt opportunities there are through SBA programs and things like that, you're seeing more and more of these people buy companies. Now, what we say in representing businesses is we're typically representing families, entrepreneurs, small groups of investors. And so oftentimes we are trying to sell things kind of up the food chain, because generally speaking, the larger an enterprise or firm, the lower their cost of capital, the more they can pay for things. But that being said, we've had very successful situations where we've sold businesses from an entrepreneur to another entrepreneur, and where there was adequate value in the offer, and that it was not just someone looking to lowball a situation or to find something cheap, which sometimes can have the reputation of these people. So again, you want the good example of whatever it is, right? If you said you're going to buy a 1992 Ferrari Testarossa, right, there are good examples and then there are very bad ones. And so it's the same in this. These are all categorically the different types of buyers, but there's very good examples of them and very poor examples. And that's why it's important to, A, hire someone that knows the space and knows the good, the bad, and the ugly. And second, to evaluate every time as if it's an ad hoc conversation, even though you know these are bona fide parties that do the right things. And so lastly, so those are the five, is family offices. And this is a very, very loose term, as there's not truly a legally defined term as what is a family office. We always joke sometimes, say family office can be a family with an office. And so that being said, there's multi-billion-dollar family offices that run at a level of sophistication akin to huge endowments and public pensions. And at the same time, there can be family offices where it's one guy or three brothers that are trying to buy businesses. And again, the quality of each is not necessarily directly correlated with how large of an enterprise. When we look at buyers of businesses, look at how many deals they've done, look at their track record, look at their interest, look at the source of capital, look into that. That's going to be far more telling than purely just how fancy is this or what their assets under management appear to be. And also understanding their reputation, because there are just some people out there, and we only want to deal with the good ones that get things done, and there's others that do not, just like in any business. And so, that being said, family offices, if you can think, kind of run the whole gamut from huge to small. They're a bit unique. It's a bit of a cloudy area. You really have to know where to look for things, and that's why it's important. Again, not selling our own book, but you have to really know where to look. Most firms, when they're selling a business, are purely going to get a gigantic mailing list, throw all of your information out there and say, please call us if you're interested. And they're going to pray for the phone to ring. In an intelligent outreach process, which is all we do here at Hillview, we are doing the research, finding which of these parties in each of these 6 categories would be an optimal fit, where there is logic, where there is rationale, where it's going to trade because of the fundamentals, the access, and the capabilities. And you have to pursue all of these paths. And you have to dig deep into each, and there's different avenues, different strategies, different ways of communicating with each of these parties. And that's why it's important to have a comprehensive exercise. Because in the middle market and lower middle market, there is particularly the broadest spectrum of potential acquirers for a business. So let's recap the 6 categories real quick. We have strategics, both public and private, middle market private equity, lower middle market private equity, search funds and deal-by-deal capital acquirers, high net worth individuals, and family offices. In any successful engagement, all of these categories need to be looked into, all of these veins need to be mined, and from that, you get the most competition and the optimal terms. So that's the thought for today. Hope the week's getting off to a good start for everyone. Keep pushing forward. God bless. We'll see everyone next time.